Well, like the U.S. economy, the office market fared quite well in 2013 with a great push in the fourth quarter. We saw the national vacancy rate drop 50 basis points to 14.9%, the lowest since 2009. In the fourth quarter, we saw 15 million square feet of positive net absorption, pushing the overall absorption to 36.1 million in 2013. Asking rates also increased 5% during the year, and we saw new construction nearly double to 18.6 million square feet, of which half of that was delivered in the fourth quarter. Well, in 2013, we saw a modest 1.6% growth in employment. However, office-using employment grew at a much healthier 2.6%. The markets of Dallas-Fort Worth, Chicago, and Los Angeles fared the best, primarily driven by tech users, but also traditional office users within that market. One challenge going forward is the headwind of workplace strategy as users employ more of that open space technology, thus not needing as large of a footprint or keeping their footprint while they add more employees in the future. Well, the office investment sales market continues to perform quite well. Despite rising interest rates, we've actually seen additional cap rate compression in several markets. We saw $36.9 billion of transaction volume in the fourth quarter. That is twice that of the third quarter. In 2013, investment sales activity in the office sector was up 27% to $101.5 billion. Interesting enough, the island of Manhattan accounted for 1/5 of that transaction volume for the year. And also, we've historically seen investors look at those core markets, but they're reaching out more into suburban markets. We witnessed that in 2013 with nearly half of the transaction activity occurring within those suburbs. Well, I'm here today in Chicago, Illinois, where despite what's already been a very cold winter, we continue to see the office market heat up. Last year, the metro vacancy dropped 70 basis points to 17.4%. We saw downtown absorb 430,000 square feet in the fourth quarter, primarily driven by the financial and tech sector. In the suburbs, we saw 1.3 million square feet absorbed in 2013. Since 2006, the first time we've seen over 1 million square feet of absorption. Investor demand continues to do quite well in Chicago, where last year we saw over a 50% increase in transaction volume, getting us to $5.9 billion. We hope to see more of the same as we head through 2014.